Hey everyone, welcome back to Corporate Decoder. Today we're diving into ALX Oncology's latest 10K report, their annual performance review. And let me tell you, it's got more twists and turns than a superhero origin story. Will they conquer cancer or will their funding run out first? Let's find out. First off, this is a Form 10K, basically ALX Oncology's yearly report card to the SEC. It's got all the juicy details about how the company did, what challenges they faced, and what they're planning for the future, signed and certified for year 2024. Think of it as a behind-the-scenes look at their quest to develop cancer-fighting therapies. The report covers the year that just ended, so all the way to the last day of year 2024. ALX Oncology, in a nutshell, is a company trying to create new ways to fight cancer. They're focused on something called CD47, which is like a don't eat me signal that cancer cells use to hide from the immune system. ALX's main drug, evorpacept, aims to block that signal so the immune system can find and destroy the cancer. One of the main stories here is about their ASPEN-06 trial, which looks at how evorpacept can boost the effects of other cancer drugs in treating gastric cancer. The initial results are promising and point to possible other interesting combination opportunities. Of course, because they are a public company and required to file the document, there's all the usual SEC legal jargon, but we're here to decode it. ALX Oncology has their common stock listed on the Nasdaq under the ticker symbol ALXO. As of June 30, 2024, the value of the company was about $251 million. Now, a critical part of any 10K is the section on forward-looking statements, which is ALX's version of peering into a crystal ball. It's basically them saying, here's what we think will happen, but heads up, things could change. They talk about everything from their financial situation to the success of their clinical trials and potential regulatory approvals. It's important to remember that these are just predictions, not guarantees, and are subject to risks, uncertainties, and assumptions laid out in the report. One important item to note is that they had some trouble in the past with their financial reporting's internal controls. Now that it's handled, the investors are able to trust the report they put out. Okay, let's get down to business, starting with what the company actually does. ALX Oncology is trying to develop therapies that block the CD47 immune checkpoint, helping the immune system attack cancer. Think of cancer cells as hiding behind a shield, and ALX's drugs are designed to take that shield away. They use science terms like macrophage phagocytosis, but what that actually means is cell eating in a very cool way. The challenge, CD47 is also on healthy blood cells, so many approaches end up hurting those too. ALX's drug, evorpacept, is designed to avoid this, which if successful would give it an edge over competitors. The company is running several clinical trials to test evorpacept's effectiveness. One to watch is ASPEN-06, which, as mentioned before, is about HER2 positive gastric cancer. Another ongoing trial is the ASPEN-07, studying urothelial cancer. If these work out, it's big news for those indications and may prove their molecule does indeed tolerate higher dosing levels. They've also secured Fast Track designation from the FDA for evorpacept in certain situations, which could speed up the review process if the clinical trials are successful. Who's steering this ship? Their CEO, Jason Lettman, has a background in healthcare investing and a previous successful run at another company, Promdir. Their chief medical officer, Alan Sandler, has over 30 years of experience in oncology drug development. ALX leadership team appears very solid, with long careers behind each of them. They've clearly tried to secure good talent, and it seems to have worked. Looking ahead, ALX Oncology has a clear strategy. They want to maximize the potential of CD47 blockade, both by combining evorpacept with other therapies and by developing a pipeline of new drugs. They are looking for other companies and scientists with similar goals to come work with them. ALX is also working hard to protect their inventions. They have a bunch of patents both in the US and internationally, covering evorpacept and their related technologies. The trouble with patents is they don't last forever and other companies can challenge them. For example, they are fighting over a European patent with the University Health Network and the Hospital for Sick Children. If all goes well, they plan to eventually sell their products on their own, or maybe with a partner. But first, they need to navigate the complex world of government regulations, clinical trials, and manufacturing. Of course, they're not the only ones trying to develop cancer immunotherapies. They face competition from big names like Merck, Pfizer, and Roche, and it's not just big pharma. Smaller companies and research institutions are also in the mix. In case you were wondering, ALX isn't a shell company, it is doing real business. And there were no previously issued financial statement errors needing correction. Okay, so after all this forward-looking info, there's also the section where they list all the things that could go wrong. Basically, a long list of potential problems that could throw them off course. First up is the money. They've been losing money since they started and expect that to continue. If they can't raise enough cash, they might have to slow down or stop some of their projects. A big risk is that they rely heavily on evorpacept. If it doesn't work out or if clinical trials fail, that's a major blow. Then there's the risk of side effects. If evorpacept or other drugs cause significant adverse events, it could halt development or limit sales. They need to handle this carefully, as other companies working on CD47 blockers have hit roadblocks due to similar toxicity issues. Government regulations are also a big concern. The FDA approval process is long and uncertain, and new laws could make it harder to commercialize their products, which is why it takes a long time to bring a new drug to market. Like any biotech company, they're also dependent on key people. Losing their top scientists or executives could set them back. With the world being as it is these days, cybersecurity is important for all businesses. They take steps to protect their computer systems and sensitive data, but of course they can be hacked. If that was to happen, it can greatly disrupt everything they're doing. They also have other third-party partners and may not be able to maintain or realize the benefits of such relationships. The list goes on, and there are many things that could go wrong. As of December 31, 2024, they had 80 employees. Their human resources goals include things such as getting the right staff, keeping them around, and paying them with stocks and cash. All right, now for the numbers. As of the end of 2024, ALX Oncology had $131.3 million in cash equivalents, and investments. Unfortunately, they also reported a net loss of $134.9 million for the year 2024. They're spending quite a bit on research and development. Also, they're a smaller company, but they don't expect it to remain that way forever. Now for the big picture. ALX Oncology is clearly in a high-risk, high-reward game. Their approach to blocking CD47 could be a game changer, but they face a lot of hurdles: financial, regulatory, and scientific. They have a shot, but it's a long road with a lot of uncertainty. The key will be how well evorpacept performs in clinical trials and whether they can navigate the complex regulatory landscape. Cash burn may remain a problem for the company. I would advise monitoring them closely. That wraps up our quick look at ALX Oncology's 10K report. Thanks for watching. Don't forget to like, comment, and subscribe for more corporate deep dives. And tell me in the comments if there are other 10Ks that you would like to see in future episodes.